There was a time when debt was viewed as a threat, something to be avoided as much as possible. However, today it has become a normalized way of spending. From footwear to travel trips, everything is available on EMI. BNPL, Buy Now Pay Later, refers to a type of short-term loan that has allowed consumers to make purchases immediately and pay for them later through scheduled installments over time. The use of BNPL has led many to overspend, often on items that are unnecessary. You may have heard that people in India are buying 70% of iPhones on EMI, but nowadays cosmetic treatments are also available on EMI. Yes, people are borrowing money for lip fillers, botox, and hair transplants. All these expensive treatments are easily available under EMI. Although it's a personal choice, but is it the right decision to commit to several years of EMIs for procedures that last only a couple of days? Particularly if you cannot afford to pay for the treatment in one-time payment? Let's discuss some of the reasons behind it. First is the social media. It has transformed into a platform where individuals race to showcase their glamorous lifestyles, which can create a FOMO, compelling people to present similar images of their lives in order to feel accepted and included. Everyone is focusing on looking rich instead of becoming it. Second are the easily available loans. Because of this, many people take multiple loans and later struggle with repayments. We often forget the risk associated with it. For instance, if a loan was taken to buy a vehicle, it can be resold if needed. But what about a botox treatment? And what if you miss an installment? You will likely have to pay penalty. A loan itself is not bad. Rather, it can become a great option if taken for health, education, etc. But we should be able to differentiate between needs and wants. The study finds that household debt has reached 41.9% of India's GDP. Household debt refers to the total amount of money that individuals and families owe to creditors such as banks and other institutions. It includes secured loans like mortgage and vehicle loans and unsecured loans such as personal loans and credit card debt. It is often measured as a percentage of a country's GDP. This signals the financial burden on individuals and the long-term sustainability of the economy. Let's discuss how rising household debt can affect the Indian economy. Firstly, it can lead to an increase in default risk. Secondly, it can lead to slow economic growth. Increased household borrowing can boost consumption, leading to temporary economic growth. But as borrowed funds are for consumption and not for asset creation, it can lead to reduced savings and investment. When individuals save a portion of their income, those savings are generally loaned to businesses to finance new investments through the purchase of stocks and bonds. This allows the economy to produce more goods and services and create jobs, but reduced savings typically lead to slower economic growth in the long run. There is a beautiful quote by Warren Buffett. Do not save what is left after spending, but spend what is left after saving. That is all for today's video. Thank you for watching. If you like the video, please subscribe to the channel.